In a meeting that begins a little more than an hour from now, the CFTC is expected to approve new rules giving the agency new powers to police fraud and market manipulation, powers authorized by the Dodd-Frank financial reform law. Bart Chilton has been a CFTC commissioner since 2007. He is with us from Washington this morning. Good morning, Commissioner. You have been arguing in favor of rules to curb speculation in commodities trading. Are you finally going to get what you want?
Unfortunately, we're going to have an incomplete grade on that, Eric. We have not gotten there on the speculation rules with regard to position limits. But we are going to do a number of things, as you indicated, that will increase our authority and power to deal with fraud and manipulation. And that's key. We're moving more towards a standard that is like the Securities and Exchange Commission. We have more of an insider trading type rule. So if you pocket profits from the misuse of privileged information, we'll prosecute you. In addition, we'll go after actions in markets, traders who act recklessly, I mean, intentionally, recklessly, that roils markets. And finally, we'll also be able to go after folks that report something false. So if they called Bloomberg and said at 8:30 this morning, a bunch of oil is going to be released onto the market, but it was a lie, and they traded on that, we go after and prosecute them. So it's a good day for us. Hopefully, we're going to approve these things a little bit later.
Commissioner, many people believe speculation and manipulation played a role in, say, oil's climb to almost $148 back in 2008. With oil at $97 today, how much speculation and manipulation is in this market?
Well, you know, I'm not an economist, and I don't want to play one on TV, and people always try to get an exact number. I won't give it to you from myself, but I can tell you what other people have said. They've talked about anywhere from, 50 cents or so a gallon. So people are paying, I still believe, based upon what I hear from other people, a Wall Street premium for the gas that they buy when they go to fill up the pump. Doesn't matter what grade they choose, they're paying a Wall Street premium.
Commissioner, if the CFTC had these powers in years past, who would have been strung up by now?
Well, I can't talk about any individual circumstances, but I can tell you we have had a very high bar to pass. So far, what we've had, our law, for 35 years, we've only had one successful prosecution, only one in 35 years. And that's because we not only have to prove intent, like we have to show an email or have a wiretap, we have to show that the trader had market power and that an artificial price was created and that market power led to that artificial price. It is such a high bar, it's really, I think, irresponsible of us not to have a new law, and that's what we have now. And assuming we pass this rule today, we're going to go after lots of folks, and the people that do the crime, hopefully they're going to pay the fine and do the time.
Commissioner, you and others have been waiting more than a year for approval of these provisions from Dodd-Frank. Who do you blame for all the delays?
Well, I think to some extent it's like if you have a bunch of college classes and your professors all give you extra homework the last week, and you just can't do it all. So if we were being graded today, I think we'd get an incomplete because we were supposed to have these rules and regulations done today.
Yeah, but it's
Commissioner,
I just need to interrupt you for a moment. You say we. Do you include yourself in that camp, or are other people
100%.
responsible? Who's held it up?
100% we're responsible. 100%. We're the folks. But the bottom line is we want to make sure that we do these things in a deliberate way to the extent that we can. So we want to make sure that we're not just doing it fast, that we are doing them in the correct way, that we don't mess up businesses who are already operating efficiently and effectively. But there are some things, like position limits that we talked about, that we should have done back in January, that we can do today, and we should do them. And I've been urging that we do it, and I hope we do.
How about the other provisions of Dodd-Frank that are even more hotly contested, like rules for the derivatives industry? Are there any signs of life on that front?
Well, that's going to take us, I think, probably several more months. What we've done is we've given ourselves a 6-month window now till the end of the year to try and complete these things. And again, we want to get them right. We want to listen to the comments from people. We don't want to mess up businesses that are out there. But clearly, we need more transparency in these markets. When we look back at the financial collapse, we know the problems that existed from things like credit default swaps. And so those are things that we need to deal with, and we're headed that way, just not as expeditiously as some of us would have liked.
Commissioner, thank you for joining us on the Inside Track. Bart Chilton, Commissioner of the Commodity Futures Trading Commission.